Gentlemen, a very warm welcome to the Q4 and FY23 earnings conference call of Hinduja Global Solutions Limited. From the senior management, we have with us today Mr. Partha Desarkar, Executive Director and Group CEO, Mr. Srinivas Palakodeti, Global CFO, Mr. Winsley Fernandez, Whole-Time Director, HGS, and Mr. Lakshmi Narayanan, CS, Chief of Staff, NXT Digital, and Chief Finance Officer, One OTT Entertainment Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Darshan Mankad from Act Factors. Thank you, and over to you, sir.
Thank you, Lizan. Good evening, everyone. We welcome you to the fourth quarter and financial year ended March 31st, 2020, the earnings call of Hinduja Global Solutions Limited. Before we begin the earnings call, I would like to mention that some of the statements made today might be forward-looking in nature, and hence it may involve risks and uncertainties, including those related to the future financial and operating performance of the company. Please bear with us if there is a call drop during the course of the conference call. We would ensure the call is reconnected the soonest. I will now hand over the call to Partha sir to share his views. Over to you, Partha sir.
Thank you, Darshan, and a very warm welcome. Good evening to all of you who are joining our earnings call for quarter 4 and for the full year 22-23. I wanted to start with a very quick update, which is there on slide 4 of our deck, which I'm hoping that all of you are able to access over the internet. Opened after a significant delay, the buyback plan opened in May 22, 2023 and ends on June 2, 2023. What is on offer is a final buyback price of rupees 1,700 per equity share, and an aggregate consideration of rupees 1,020 crores, excluding buyback tax. The total number of shares to be bought back in the buyback shall be up to 60 lakhs equity shares. So this issue is now open. You should be able to do this online, and you would have received information about this from K-Team Technologies, and hope you are participating in this effort of AGS to return money to its shareholders. With that, let me quickly jump over to give you the headlines for 2023 year. I think post-COVID, 2023 was a different kind of a year. The 2 years post-COVID, we were scrambling to maintain our service levels, sending people home. Globally, 40,000 people went home to start working from home. During January 2022, we also exited our healthcare BPO business. And the year of 2023 has been consumed in converting the business that was left behind into something which is digital, which is technology enabled, and which is also set up for the future. With that in mind, you will remember February 2022, we set up footprint in Australia, the acquisition of a company called Diversify. That is now fully integrated into AGS's core services. We also merged the Net Digital business in our business, and Vince later on during the call will tell you about how that is going. And the exciting piece is on February of 2023, we completed our acquisition of a data analytics and financial planning company called TechLink, based out of Chicago, Illinois. So you recognize that this is being a very busy year trying to get the company ready for digital businesses. In our efforts, we have opened up a greenfield center in a city called Barranquilla in Colombia, and I'm going to cover that later in the call. We set up Mysore and Indore in India. We opened up a small site in Belfast, UK, and in New York, we have opened up our first digital marketing-oriented office towards the end of Q4. We'll come to that later. The important part is that we have focused on real estate footprint rationalization. 95% plus of our workforce in North America and in Canada are working from home. And we have attempted this year to try and reduce our footprint because the brick and mortar footprint was lying empty. To the extent that our leases allowed us to exit those real estate facilities, we have done that. So significantly focused on Canada, but even UK, we have reduced our footprint significantly. US, we are in the process of reducing the footprint as we talk. Unfortunately, there are a few leases which have longer duration. We are not able to exit. And there are a few properties in the US which are owned properties. We are trying to exit out of them, to sell them. The valuation of commercial property in the US, unfortunately, is not great for reasons that I'm sure you can understand. We are not in a rush. We have closed down those facilities. We are not operating those facilities to save on maintenance costs, but we will be trying to sell them as and when we get a good valuation. So overall, you understand that this business has now completely changed from the significantly BPO business that used to be earlier. This is more technology focused, it is more forward looking, and hopefully it will also be able to improve the margin profile of the business as we transform the business. This is the news that I want to share with us. Late March 2023, we inaugurated our US headquarters in New York. This is where I have relocated as the CEO of the company, so I now operate out of the US. I did that because large part of our business today is generated from North America, and also the acquisition that we did in February required very close oversight, so I decided to relocate from Bangalore to New York. So apart from being the corporate headquarters, this is also going to be the hub of digital marketing. Social engagement services hub is what we are calling it. We will be delivering social media, content production, and digital marketing services to corporate marketing teams. We are also trying to sell our services to about 1,000 plus odd digital marketing agencies that exist in and around the greater New York area. So this is an exciting business that we are trying to get into. We have a small footprint in this business, but we are trying to enlarge this footprint. The value prop is that we will act as an agency of agencies. We will get agencies that are based in high-cost locations to get the work offshore for development in India and Philippines. We'll move to slide 7. I want to briefly talk about Barranquilla, our newest network addition. Barranquilla is a city which is about an hour's flight from Bogota, which is the capital of Colombia. There is a population of 2.3 million, a labor pool of 1 million workers, 11 major universities, highly talented workforce which can speak fluently in Spanish and are able to address the Hispanic population in the US. They are also good bilingually. It is aligned to the US Eastern and Central Zone, and because it is on the same time zone and is a short flight from Miami, many US companies are now looking at Latin America to diversify from the traditional supply countries of India and Philippines. I'm happy to say that since it started in November, we've already added about 121 people. We are supporting English, Spanish, and a smattering of Portuguese as well. We are doing primarily voice processes, but also backroom processes for our financial services clients. And the lines of businesses are customer support, tech support, and sales. We move to slide 8. Coming to financial numbers, the top lines improved significantly. You can see 12.2% growth from 4,479 to 5,000 crores plus. A strong year. EBITDA has also improved, 62.5% growth from 469 crores to 762 crores. This business had profitability challenges last year. The DBT has improved as well, and the PAT has improved as well. So overall, as I said, in the midst of all the turmoil caused by the transformation that we are going through, all the uncertainties that you're hearing about in the developed economies, about the uncertainty caused by war, fuel prices, and in general, the fears of recessions in the United States, the bank failure that has happened in the United States and in Europe, we are very proud that we were able to produce these kind of numbers in the midst of all these uncertainties. So this is the year as a whole. I do have to cover Q4. The Q4 numbers do have some wrinkles that you will see, and we'll explain what those wrinkles are. It is not something that you need to worry about. I think the bigger picture is how we performed in 2023. As I was saying, Q4, the numbers don't look great. And there's a reason for this, and I want to explain, and Pala will probably cover this in greater detail in his session. These are not numbers that are impacted by operational metrics. These are numbers significantly impacted by foreign exchange movements of the different currencies that we deal with in this particular quarter. Okay? So yes, all the numbers out here show negative, and Pada can cover this in greater detail in his financial section. But let me just step back and tell you that I don't think we should worry about Q4 because these are really caused by foreign exchange fluctuations of the global currencies that we deal with. It's not under management control, but the business continues to perform very well. So look, I think the headline in slide 20 captures it all. We are transforming into a technology-led CX business. Our traditional CX business has shown steady growth. So out of the 400 million odd revenues that you have today, with the addition of TechLink, our digital revenues are about $100 million, which is pretty good, I would say. In a short while, we have been able to grow a business that we started only in 2018 with the acquisition of Element Solutions, which was a small mid-teen revenue. We have grown our technology business to $100 million run rate for this fiscal. Offshore revenues have also grown, which is again good news because offshore revenues are clearly a lot more profitable. We have had good growth from existing clients, and we have a very good pipeline as well. The only caution that I'll have would be for UK. You would recall that we had signed up with the Health Services Agency in US to provide pandemic-related track and trace services. It was a massive contract of £211 million that we signed, and it was meant to help the UK government cope with COVID and other pandemic-related services that they were providing to the UK population. We were also supporting the UK government with Brexit. Now, the reality is that Brexit is now into its third year. So therefore, people have become more used to trade with the Republic of Ireland. And the demand for that particular helpline, which was meant to be for Ireland and UK trade, has come down significantly. The other good news is COVID is no longer the threat that it was in the last 2 years. And you're aware that WHO has declared an end of the pandemic. While that is excellent news, that is just brilliant news, there's nothing that could have been better for humanity. The impact of that, of our revenues, is that our revenues from that particular contract, which was at one particular time projected to be in excess of £200 million, is now much lower. In fact, last year, our revenue from that particular contract was in the region of £30 million only. That was half of what we had expected this project would be. Again, this is something that is difficult for a shareholder to obviously appreciate, but you have to step back and look at the bigger picture. The contracts would have been large had the pandemic continued. And frankly, as I speak to all of you, I'm so happy that we are out of that trouble. And yes, it does impact our contract. We have downsized the teams, and the contract will never be the £200 million that we had expected it to be. But I think we are better off. On the technology solutions business, we continue to focus on long-term deals in areas such as managed services and cloud. The technical acquisition brings us new capabilities in the area of data analytics and also financial planning. And on top of that, if you understand what the digital business, the net digital business does for us, the net digital business is all about access, providing access, removing the digital divide between people who have access to internet and people who don't have access to internet. Internet today is like oxygen. You cannot survive without internet. And NetDigital provides the technology that can provide excellent quality content and access to remotest areas of India, as Vince will talk to. So all of this, obviously the backbone of everything that we are trying to do is digital access. And that's where NetDigital fits in. So quick look at our global footprint. Canada, 2,000 people, US, 1,200 people, Jamaica, 1,500 people, Colombia, our latest edition, 121 people, UK, 1,600 people, India, 10,000 people, Philippines, 3,200 people. Australia is our sales and marketing office. We have one person who's driving sales and marketing from Australia. Next slide in summary. 2023 has been strong. We continue to focus on sustained growth. We've talked about all the investments and all the embracing of digital and AI technologies. I think the most important development in the technology field is in the arena of generative AI that all of you talked about, all of you heard about, ChatGPT and Bard and all of that. I think it opens up a huge ocean of possibilities for people who are in the CX field like AGS is, and we are extremely happy that this technology advancement has happened because it's going to transform how CX is delivered world over. This is the growth plan that I want to talk to you for AGS 2.0. We want to provide frictionless customer journeys, and that is where generative AI is going to play a big role. Continue to transform. Our technology revenues today is $100 million plus. If you were to look at this company, we had our first technology edition in 2018. So I'm very proud to say that it's $100 million plus. Beyond traditional CX and digital media, We are providing a range of interconnected services to enable impactful change to our clients' businesses and to provide access and remove the digital divide. Want to go to slide 16? You will see that if you look at these two activities of this Venn diagram.
Sorry to interrupt.
On one side.
Excuse me, sir. This is the operator. Sir, your audio is breaking up.
Okay. Can you hear me now?
Yes, sir. We're able to hear you now.
Okay. All right. So you will see that traditional IT companies do what you have on the left-hand side of the Venn diagram, digital services. What AGS used to do earlier, before when we had healthcare, was purely BPM. We are trying to create a new business model which operates at the intersection of these two circles, which is the thing in the middle: social engagement, digital marketing, artificial intelligence-driven process engineering, unattended CX, robotized CX, AI-supported data tagging, labeling, and generative AI. So these are all new fields, and we are acquiring capabilities as we speak, both organically and inorganically in these spaces. And that is the future of all of AGS. And encompassing all of this is Next Digital, which provides the backbone of internet access that enables all these things to work. So that is the services portfolio that we are taking AGS 2.0 to. With that, I'm going to hand it over to Vince Lee for his section on digital media. Vince, over to you.
Thank you very much, Partho. Thank you. Much appreciated. I'm just going to start with with what's happening right now on in the space. Everyone knows that this year has been emerging out of the pandemic, and everyone's trying to redo and restructure their businesses and technology and operations. As I shared with everyone in the last couple of calls that I've been there, that our focus has been effectively on future technology and leveraging the 3 A's that Partho has mentioned for a long time, and that's so important, which is right from automation and analytics to artificial intelligence and their deployment. And one of those things has been the enterprise business unit, which we launched just over the last 6 to 9 months. We focused in this quarter, in quarter Q4, on validating our value proposition of the products that we have to offer, and we've seen significant amount of response in terms of key industry segments, not just in terms of saying, yes, this is a product that works, but also more importantly, engaging with customers. So effectively, there are 4 products that we have launched. The first is the mesh network, where we are providing a single window clearance to customers, and we have some levels of NDAs in place, but the companies have been very kind to help us, and we will be hoping to share that shortly as soon as the installation is complete, where we as Next Digital are a single window, an integrated single window providing national connectivity for these companies for fiber and satellite-based broadband. I'll give you one example. One is a very well-known digital cinema organization. So we connect all their cinemas, not just with terrestrial fiber, but also satellite-based broadband, so there's no question of losing signal. The moment fiber goes down or there's any problem, it switches over to satellite. So that is the first product that's already been rolled out successfully and already is engaged with a client. The second is software-defined wide area networks, SD-WAN, and we've seen traction. Again, there is a customer that has been signed up for SD-WAN because more importantly, and this works on the premise of economical pricing more than it being a innovative solution only. So that's been happening. With so many people working from home recently, we've developed a solution, a work from home solution. There are POCs currently going on, proof of concepts across the country. And this is a product, as Partho also is strongly one of the sponsors of this project, will look to take this to overseas customers once the POC is successful. Effectively, what it does, it provides customers with, it provides companies to allow their staff to work from home, not just using a simple broadband connection in a telephone line, but providing online security services, modules, everything that a customer, that a work from home executive would require to ensure he delivers maximum productivity and efficiency. The last, of course, is our pure play broadband over satellite that has been working significantly. We already have gained traction in education, as I've shared in the past. We're running with Tata Study, we are running education initiatives, and we're looking to take that further as well. This by far is the big driver for us in Q4, which we were focusing on. In terms of, as I mentioned to you, our focus as an organization has been over the last couple of years, at least 3 or 4 years, we've been transforming into a profitability-driven organization and into a future-proof organization. For us, growth is not just top line or is not just subscriber base, and that is something that you can see has worked very effectively for us. It is how to transform customers into being customers for the future, right? Because we all know cable television has some level of structural decline, not just cable, DTH, any linear television. There is some level of moving to OTT, some level of moving to free services. So the idea is how to build a digital product, and we launched One Digital, if you all will recall, around October last year, September actually, and we've seen some incredible progress on this product. It's a very unique product. It offers customers broadband just for the sake of being repetitive. It offers customers speeds up to, a broadband product which speeds up to 1000 Mbps, 650 television channels, OTT from the best regional and international content, voice over IP services, intercom, CCTV, and of course Wi-Fi, building Wi-Fi. So this has really worked pretty well, and quarter on quarter it has been growing significantly. Now, having a great product, as I mentioned even on the last call, is great, but there's no use in having a great product if you don't have a team that knows how to sell it, install it, implement it. So our project called Next Sangram that we launched to train digital services partners across the country has been going full swing. We've trained, as of today, we've trained over 1,500 last mile owners or franchisees across the country, which covers about 231,000 customers. So we're focusing on making sure they get trained, and we focused on markets slowly. We're also looking at other places where new and emerging digital technologies can be rolled out, and that is something that's in play. If I come to the KPIs for this year, we were very, very clear that we wanted to focus on quality of customer and quality of revenue. And our entire focus has been on how to ensure we not only grow revenues, but also be able to improve profitability, be able to improve ARPUs. And therefore you can see, while our subscriber bases, both in terms of digital television and broadband, have remained flat, as in there's been no significant growth. That has been deliberate because we've been focusing on the KPIs that matter the most, which is retention and therefore improving the quality of revenue. If you look at the box in the center which talks about the 90-day net churn, we are looking at being well below 2% net churn, which is fantastic for our entire industry. And that is something that we're very proud about because it also translates into revenue, and it means the fact that we're able to get in more customers at a qualitative price. The same thing in broadband. If you look at broadband, while the base we've ensured remains the same, in fact, we've been conscious enough to let go of customers that we believed were not really adding value to the business. We've actually grown the ARPUs. That has seen some tremendous amount thanks to a project that we launched in Q2 to be able to fix and grow the business. The ARPUs, our average revenue per user, in a year when we've seen everyone else's ARPUs come down, and that's why the headline that performing above the industry-wide trend on key parameters is very clear from the ARPUs. The ARPUs have grown from about 259 in Q3 to 292. That is commendable ARPU for anyone in the broadband industry. And most importantly, if you look at the other two KPIs on the lower center and the lower right, those point out to the efficacy of the business, the profitability of the business, the drive towards ensuring a strong, profitable business, where churn of direct points has been brought down to below 4%. The industry-wide trend is anywhere between 4.8 to about 5.5, and some places 4.2. But we've been able to bring it down to sub 4%. And at the same time, bandwidth costs, which is another critical aspect, and I'm only sharing this here this time to show that this is the kind of efficacy project that was brought about in Q3 of how to improve the quality of revenue and the quality of the product to be able to deliver this kind of model going forward. So overall, the media and entertainment industry, no question, specifically the digital distribution industry, has faced some significant growth challenges in Q4 as well as across the entire fiscal year. But what we've done as an organization is focus on the tomorrow rather than just on the today. So our tomorrow is how do we ensure our existing customers, how do we provide greater services to them, enter a product like One Digital, how do we go after a new segment of customers, namely the enterprise business unit, leveraging all the infrastructure and investments we've made in the business, and how do we leverage the incredible network and technology of Hinduja Global Solutions in terms of the CX aspects that have been put out. So when we looked at combining all of that together, we've been able to end the year on a very strong note, giving us a great driver for this quarter, of course, and for this new fiscal. Yeah, I think that is pretty much it from me. If I'm not mistaken, there is, can you change the slide? I'll hand over to Pala from a perspective of updating everyone on the financials. Pala, over to you.
Thank you, Vince. Good evening, everyone. Thank you for joining us on the Q4 earnings call. I am on slide 22. This is the financial performance of the year. A couple of things I wanted to call out. These are completely like-to-like comparisons. In FY22, we had the healthcare business up to January 22, and then that has been excluded, and all performance relating to that has been shown under the discontinued operation. Also, in FY22, we, as required, we've added the Next Digital Media business, which has become part of the AGS during the year. So it's a like-to-like comparison. As you would see, there has been an increase in revenue from operations of 5.4%. Significant increase in other income from about 205 crores to 518 crores. So this has three broad components: the FX gains, the interest income from the treasury surplus funds from the sale of the healthcare business. Plus, as Partha mentioned, during the course of the year, we've rationalized our real estate footprint, and there are also profits from the sale of some real estate overseas as part of the other income. Our EBITDA, as you see, is up by about 62.5%. At a PBT level, we closed the year at 202 crores profit as compared to a loss of about 109 crores. There are tax reversals of roughly 102 crores. And so PAT from continuing operations has come in at around 305 crores as compared to a loss of 39 crores. And we have shown separately profit from the discontinued operations. In the current year, in FY23, there are profits of about 46 crores. That is primarily coming in from the working capital adjustment. So total PAT for the year has come in at roughly about 351 crores. Moving on to next slide. This is the quarterly performance. As we would see, there is a drop in the total revenue And you would also see there is a drop in the other income. So if you see the quarter ended March 22, other income came in at around 117 crores, whereas that has dropped by about 18 crores to about 98.4. And as you would see from the publication page, during quarter ending FY22, the last quarter, there were FX gains of 62 crores. That has become a loss of about 15.1 crores in Q4 FY23. So that accounts for the drop in the other income. There's a drop in EBITDA on a year-on-year basis from about 153 crores to 134 crores, primarily on account of drop in other income. And at the overall level, PAT for the quarter was 25.8 crores as compared to 45.9 crores for the quarter ending March 22. Again, primarily coming from the drop in other income. Moving on to the next slide. This is our summary financial profile. Our net worth as of 31st March is 8,719 crores. Obviously, this will change based on the final buyback amounts and the transaction costs, the taxes relating to this. As things stand, against a market price of 1156 rupees per share, book value per share is 1661. We have declared total dividends of 15 rupees during the year. This includes the final dividend of 2.5 rupees per year. Our total dividend outgo, including the final dividend, comes to roughly about 72 crores, which is roughly about 20.5% of our consolidated profits of 350 crores. On the gross debt, we have debt of about 321 crores. We have cash in bank balances. These are not only in India, these are across different geographies, overseas subsidiaries as well, leaving us with a net position of about 822 crores. Net cash position. If I move to slide 25, this gives a little more detail in the total liquidity position of the company. We have short-term loans of 2,814 crores. We have cash and bank deposits of 1143 crores, and we have investments in debt instruments of about 2,734 crores. So that gives us a total cash and treasury surplus of 6,691 crores, and netting of debt of 321 crores, it gives us net cash and surplus position, treasury surplus position of 6,370 crores. Moving on to slide 26, this is the total revenue of about 5,023 crores, little over 500 crores of other income. The BPM business accounts for around 61% of total revenues, and digital services, which includes the media business as well as the digital BPM business, that accounts for about 29% of total revenues. From a revenue split perspective, this is on the operating revenues only of about, on the base of 4,500 crores. From an origination perspective, this is a graph on the right-hand side. US continues to be the biggest market at 32%. India, which includes the digital media business or HRO business, is about 28%. Canada is 13%, and UK is about 21% of total revenues. From a delivery perspective, India is up from 28% to 32%, then that's on account of the onshore delivery. UK is about at 17%, US is about 25%, Philippines and Canada accounting for 9% and 13%. Moving on to the next slide. This is again a split of revenue by vertical. The media business, which consists of the digital media business as well as media clients for our BPO business. A media account as a vertical accounts for about 31%. Then we have the second one, 20% at consumer and retail. Public sector, primarily from UK and also some in Canada, account for 12%. Rest coming in from BFS, technology and telecom, as well as miscellaneous verticals. From a client concentration perspective, since the next digital media business is primarily on a B2C basis. So from a revenue concentration, all these clients come from the BPM business. So the largest client accounts for about 8%, top 5 account for about 29%, and the top 10 account for about 43%. Business continues to be strong from a cash flow perspective. It was about 61 days of sales as of FY22. While the revenues have grown, DSO days have come down from 61 days to 59 days. Coming to capex, so the 498 crores of capex in FY22, that consists of the BPM business, the erstwhile healthcare business, as well as the CES or the non-healthcare business, along with the digital media business. That has come down from 498 crores to 294 crores during FY23. To some extent, these are not strictly comparable because it also includes the erstwhile healthcare business of HGS. Moving to the next slide. This is the last slide on my presentation. This is the stock price movement. HGS share price. This is share prices as on Friday, up by about 25% over the last 12 months, as compared to a 13% on the growth in the Nifty index and about 2.5% on the CNX IT index. So clearly, from a sectoral perspective, we have done much better than the CNX IT index movement. That's all I had on the financial section. We would now like to open the session for Q&A.
Thank you.
Thank you, everyone.
Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jyoti Singh from Arihant Capital Markets Limited. Please go ahead.
Yeah, thank you for the opportunity. So my question, I have 2-3 questions. So, sir, first, as you have mentioned about the AI impact on our business, if you can discuss a little bit more details, like what is the impact of AI, like ChatGPT and all. And second, what is your view on the growth outlook for 24-25 and margin guidance going forward, if you can? And third is, how is the deal momentum we are seeing in TechLink as we are using cross-selling opportunity in it?
Yeah. So let's take one by one. What is your first question? I'll answer your first question, then second, then third, then fourth. It's difficult to remember all 4 questions in one go. What's your first question?
Yeah, sure. So my first question is on the ChatGPT impact, like AI ChatGPT impact on our business. Like you discussed a little bit on that. So if you can discuss a little, well explain, if you can. A little elaborate on that.
That is a very good question. I'm sure that question is in everybody's mind. And I think if any of you have used virtual assistants or chats in its current form today while trying to do a transaction over the internet, I'm sure all of you will share my frustration that today's chat technology is absolutely rudimentary and completely dissatisfactory. From that position, the ChatGPT technology, I will call it generative AI because ChatGPT is just a brand that Microsoft uses, right? Generative AI gives you the ability to tremendously change knowledge management, and therefore, when you are interacting with a machine, today the experience is thoroughly unsatisfactory. With generative AI technology being deployed, you will not be able to figure out whether you are interacting with a human being or whether you're interacting with a machine, because the machine will have a lot more information than currently the chat systems have. As a result, you will find a lot more information, the questions that you ask being available, being answered intelligently by the machine itself. And our job will be to train machines to be able to answer those questions based on our particular client. For each of our clients, 100 of clients that we have, we will have to work with the generative AI technology to improve their CX front end so that the machine can answer in a very satisfactory way all the questions that the consumer has. And when it realizes that it is not able to answer the question, at that point of time, it will seamlessly transfer that to a human agent who will be overseeing every transaction that is going on with the machine. So the answer to your question is that this technology is completely transformative. It's going to completely change the way customer interaction with machines through the internet happen, and it's going to be used well. Generative AI can be a game changer for our industry. And we are well leveraged because of our background in CX to be able to harness this technology to its fullest extent. That is my answer to your question one. What is your second question?
Yeah. So, sir, my second question is on the outlook side. So, what's the outlook for the 24-25 on the revenue and margin side?
So, both sides we will do well. We are expecting margins to expand. I cannot give you a specific number guidance, but we are expecting margins to expand. Revenue growth also, we are expecting the revenue growth to be the strong revenue growth numbers that we have always traditionally been able to do.
Okay. So, sir, as you are saying, a strong growth revenue. So, are we have any strategy or any planning for that going forward for 24-25?
So that is what if you look at, I think I shared one slide which is the strategy slide. Okay, if you look at the presentation, can you please refer to slide 16?
We are not able to hear you clearly. Hello?
Is this any better?
Yes, sir, this is much better. Thank you.
Okay, so the question on strategy is answered on slide 16. Can you have a look at slide 16?
Yes, sir.
You will see that there are two circles. Okay, on the left-hand side is our technology circle, digital services circle. And on the right-hand side was the pure play BPM circle that we used to be, right? And a large part of it was also healthcare, which we divested because we realized that we wanted to move more into technology services as opposed to pure play BPM services. Now, at the intersection of these circles, you will find our new age services, social engagement, digital marketing, AI, which is artificial intelligence driven process engineering, CX, generative AI, everything is there in the middle. So this is the sector that is going to grow, and with the advent of generative AI, I think the future is going to be transformative. So this is the area that we would like to go. The intersection of technology services and traditional BPO services. We are calling it digital operation.
Okay, thank you, sir. And sir, how is the deal momentum we are seeing in TechLink as we are using cross-selling opportunity in it?
Very good, actually. So they have a lot of data analytics capabilities that we are taking to our existing customers, also financial planning. And they are selling our traditional cloud automation and traditional BPM services to their clients. So I see that in the month, since it's been 3 months now, March, April, May, we are in the third month. I think the opportunities are ripening as we see that we are able to cross-sell each other's services. We'll have something more concrete to talk about probably in the next quarter.
Okay. And so lastly, my question on the UK side, what's your view going forward? We have some headwinds during quarter.
Can you repeat the question? I was not able to hear you.
Yeah, sorry, sir. So, sir, lastly, your view on the UK front, as we have seen some headwinds on that side. So what's your view going forward?
Yeah, so I did mention that the UK growth for the last 2 years during Brexit and pandemic was on the foundations of one-off contracts. The Brexit contract is winding down because it's been some time, and of course, the COVID is no longer the pandemic that it used to be. So because of that, the UK is facing some growth challenges. And I wanted to call it out up front. We have a new CEO. We have brought in a new CEO. He's a very experienced person that has managed large businesses. We have to build the UK business back to its levels of growth that it had seen in the last 2 years. That's going to take some time. It's not going to happen this year.
Okay, thank you, sir. That's it from my side.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Rahul Singh from Angel PMS. Please go ahead.
Yeah. Hi. Am I audible?
Yes.
Yeah. So first of all, sir, I had a few questions. The question was on the digital business. So it has contributed roughly 29% to revenue this financial year. How do you see the contribution going up in this domain, and do you have any target in mind or objective to reach a certain figure in the next few years? Yeah.
So, I mean, if you ask me, if I were to look at a crystal ball, then I would like to completely reverse the revenue mix in 3 years. So today it is 30-70. 3 years from now, I would like to see it being 70-30. But this, as I said, there is a lot behind this statement, right? There's a lot of crystal ball gazing. There's a lot of future looking. But those are the things that I would like to do.
Okay, thank you, sir. Another question, sir, on NXT Digital's merger. So basically, the merger is now completed, and we are into the quarter two. So what I'm trying to basically say is that when will we see the synergies aligning with the business, and do you see the synergies strengthening in the next year?
So Vince talked about the enterprise business in one of his slides. I believe that's the beginning of access technology that is going to completely transform the way people work from home. The SD-WAN technology is going to be very, very influential, and also the ability to provide broadband over satellite. Those are emerging technologies that will revolutionize access and will give a fillip to of digital divide. So I think that's where the future lies. Vince, you want to take this question and answer that in a little bit more detail?
Sure, Parko. Rahul, I think you're also aware, Rahul, there's so much being written about and spoken about broadband over satellite, for instance, right? It's becoming a very significant aspect, and it will change the way we do business. Not the way we do business, the way we even live, right? I mean, whether it is at home, being able to have broadband on tap anywhere in the country on demand, I think that is going to change significantly. So our entire foray of Next Sky-Fi is to be able to leverage that technology. We've already launched, so the beauty is we're the first off the blocks to have already launched it. We already have commercial customers. We already are doing, for example, sensor management for a solar farm in central Maharashtra. And we're doing a couple of other projects, as I mentioned, for a digital cinema. So we'll see that being a strong driver for the business. And enterprise business unit will continue to leverage all the new technologies and all the new infrastructure as it emerging technologies effectively for this space. So whether it's the mesh of connecting India everywhere, not just with terrestrial networks, but also satellite, whether it's Sky-Fi, which is the broadband over satellite service, whether it is new solutions like work from home, digital work from home solutions, all of this is being bundled together to be able to push for a strong foray in this space, Rahul.
Thank you, sir. Thank you for such a detailed answer. So the last question would be that as we are the fourth largest player right now in the market, and we are also dominated by larger players, what differentiates our company's bundled services approach, and how does the company plan to expand and gain market share in this current competitive landscape?
I'm assuming you're referring to the digital media business, right, Rahul? You're referring to the
Right. Yes, sir.
So Rahul, I mean, the simplest answer, Rahul, would be for you, and you're an analyst as well, would be for you to do a simple comparative of the KPIs, across a peer-to-peer comparison, and you'll see that Next Digital, is pretty much way up there in terms of the quality of revenue and as well as the growth in EBITDA, etc. But I won't use that as the answer because I'm sure you know that already. I think what we've done is we've focused always on being different. So while everyone was saying, cable is the way to go,